Hello people, let's continue our discussion. Now we are doing cash flow statement ka revision. Sir, cash flow statement is backed by accounting standard 3. All the treatments and etc. is recommended by accounting standard 3. Okay. Sir, cash flow statement. It's not a ledger. It is cash flow statement. In statement, there is no debit credit. There is only plus, positive and negative. So cash flow statement is simply a statement which captures cash and cash equivalents coming in, cash and cash equivalents going out. Inflows and outflows of cash and cash equivalent only is getting captured in this particular statement. So if it is not a cash transaction, it will not come under cash flow statement. But don't be misled by the term cash. Cash here refers to cash in hand as well as cash at bank. Cash in hand as well as cash at bank. Both are considered as cash for this purpose. So cash and banking transactions coming in, cash and banking transactions going out is captured in cash flow statement. But not only this, we capture one more element ka inflow and outflow called what's sir? Cash and cash equivalents. Cash equivalents. Cash equivalent means what? They are not cash. They are not cash, but they are equal to cash. Hence the name cash equivalent. They are basically your short-term investments. They are basically your short-term investments where the holding period will not exceed 3 months. You have purchased an investment and you want to hold that investment for how many months? 3 months or lesser. If you are planning to hold an investment for 3 months or lesser, it becomes what, sir? Cash equivalent. But there are some other criteria also, that investment should be subject to insignificant value change risk. It should be subject to insignificant value change risk, meaning that investment should not be very risky. It should not be very volatile. Its value should fluctuate too much or it should not. It should not. Sir, suppose you purchased Zomato ka shares and you are planning to hold it only for 1 month. You purchased Zomato ka equity shares and you want to buy it or hold it only for 1 month. So it's an investment for you. Can I treat it as cash equivalent? No. Why? Equity shares ka value is what? Changes significantly. So equity investment, cryptocurrency ka investment, all these are not what? Cash equivalent. Why? Though you are planning to hold it for less than 3 months, it is subject to what risk? Significant value change risk. Their value fluctuates quite highly. That should not happen. That means which investment is cash equivalent, sir? Suppose you purchased an investment of some government securities, RBI bonds, central government bonds. Their value will fluctuate too much or not so much? Not so much. So they will come under the aspect of what? Cash equivalent. Okay. So cash equivalent means one, it should be highly liquid. Highly liquid means you should be able to sell it easily. The total holding period should not cross 3 months. Their value should change too much or it should not change too much. It should not change 3 months. All these are satisfied means it becomes what? Cash equivalent. That's one. So this cash and cash equivalent coming in, this cash and cash equivalent going out is captured in a statement called cash flow statement. So far good? Can we proceed? Okay, sir, this inflow and outflow, we put it under 3 buckets. This inflow and outflow, we put it under 3 buckets. Those buckets are operating, cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. That's all it is. Take those inflows and outflows and put it under 3 categories: investing, operating, investing, and finance. As simple as that. Okay. Now people, first category, what is the first bucket? Operating cash flow. So operating cash flow you can find out using one of the 2 methods. Both the methods will give you same answer, but based on the information we can use one of the 2 methods and find out. Those methods are direct method, indirect method. Only operating cash flow. Operating cash flow I'll call for here class purpose as OCF. Okay, this OCF you can find out either using direct method or indirect method based on the information given in the question. Practically every company uses indirect method because it is easy, very format driven, but you can also go for what method? Direct method also. In exam, you check what is asked and then do it. Okay, don't do your favorite thing. Okay, what is asked, check and accordingly do it. All right. Now, people, there are certain concepts. First, we will run them by. Then we will take up some questions based on how much time we have. Okay. Now, first thing, cash flow statement, according to me, is the easiest topic. Though many students kind of do a lot of mistakes here and lose marks. In my opinion, cash flow statement is very easy because in the question only there is answer. Any problem? 1 second, huh? I'm good. Thank you. Perfect. What was I saying? Cash flow statement is quite easy. In fact, whole syllabus for you is easy only, no sir. What is difficult for you, Ayo? You are such big brahaspatis. For you, subject and all is matter. You will shrug it off like dandruff only. Tuck, 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 swaha you will do. Not dandruff, subject. Yeah. All right. No. So. But ultimately, see, honestly, I believe that. I'm not saying this just for the sake of it, right? How you think, that's how your life will turn out to be. How you think, that's how your life will eventually turn out to be. You know, some people, if you observe, if you sit with them for 5 minutes, they'll only talk about problems and problems and problems. Have you observed? Much of this happened, all that happened, rained, our girlfriend left out, no sapad. They'll keep talking. That is a pattern. That is a pattern. If whenever you want, you sit them, they'll only talk about negative, negative, negative. Yes, it may be you or it may be your friend, I don't know. Right? But there will some people who will always be happy, if you remember. It'll be raining, they'll be getting drenched in the rain. They'll be like, what a nice weather. They'll be like that. So for happiness, you don't need much of money and much things. All you need is what? Framework, frame of mind. If you are happy, right? Even if you don't have money, you can be happy. If you don't believe me, just go. Just travel, you'll get to know. Sir, okay. Okay, I'll just, maybe since I've started, I'll just tell you this in 1 minute. But yeah, okay, I'll watch it. People, once, no long back, right? I did one of those solo trips. I think it was around 45 days, right? One of the place where I went in Himachal, that still is very close to me. I always give, whenever I just feel a little off and all, I just go back to that memory. It brings a lot of happiness to me, right? There was this bike ride which I did from, it's called Spiti Valley bike ride. You do it from Manali to Shimla. It's a 6 days, or you can do it in 3 also, but usually people do it in 5 to 6 days ka bike ride it is. Like Ladakh, Spiti Valley is an off-roading track where you can do a bike ride. I done it long back. So that's a circuit basically. In that particular valley, you know, there is hardly any houses. In fact, you will sometimes drive hours together. 3-4 hours, you will not even see a single person, not a single house. Only you and mountains, road, your bike. Nothing else. You'll just keep riding. So the houses also are very, very less in number. Okay, in some houses and all, I mean, some areas may you hardly have 10-15 houses. I'm talking about whole area. Imagine having 15 houses in Chennai. Like that big an area, hardly you will have out 10-15 houses. And usually what they do is, ground floor mein they stay, first floor mein they use it as a guest house for the tourist. So I went to one of those guest houses and I was staying there. Beautiful house, very, very cozy. It was like the view was too good. Like the mountains, like, you know, the nice breeze, and people were so nice and smiling and all. No? Felt really good, right? Can you just guess, like what is the cost of that particular guest house, including meal, 2 meals? Okay, I think breakfast and dinner is what they offer, because after breakfast people leave, they continue their ride. So usually people reach the place by usually 4 o'clock, 5 o'clock. So they have dinner, next day they have morning breakfast and they take the bike and move. So usually they offer, almost every house offers breakfast and dinner. Stay, breakfast, dinner, including, tell me how much do you think they would have charged? Beautiful view. There is a valley. Okay, amazing views. How much it is? 3K, 5K. Free. He's saying free. Yeah, right. I am their cousin. They'll give free. Okay. Sir, if it was anywhere in the tier 1, tier 2 city, minimum they will charge 10 to 15,000. For that ambience, for that food, home cooked food, nobody will charge less than 15-20,000. You know how much they charged? I think I went 3 years back. 400 rupees. How much? 400 rupees. Yes. Per head, how much? 400 rupees. Sir, I was taken back when they said that. I literally asked 4,000 or 400. They said 400. Sir, they are giving like it's such a nice house. It's not like the treatment is like this. Okay, it's a proper house. They've given like big chadar. Like, it's quite cold out there. The temperatures reach -5 and all. So you need a lot of blankets to cover yourself up. So it's very cozy, right? They put up what I think they call it. They call it some name. I don't know. I forgot that name. Where it keeps you a little warm. क्या बोलते हैं इसको? Like घर में चलता है ना अंदर. कुछ बोलते हैं उसको. कुछ नाम है उसका. पता है क्या तेरे को? Some heater. Okay, some heater, but internally generated heaters. Okay, they use a specific name. I forgot about that. So it had all that heater and all that facilities. Okay, for all that they are charging how much? 400. I was curious. Are you charging me 400 because I look so nice to you, or is it the general thing? They said 400, 300 to 500 is average price. And you should have seen, sir, that lady of the house, right? I think she was a granny. I think almost 55, 60. She's coming up to me at 5 o'clock and asking, what would you like to eat? What can I cook for you? Service, sir. She's charging 400 rupees and she's asking, what should I cook? And you don't believe it. She made roti. She made 2 varieties of dal and rice. Okay. And her daughter was helping and she was putting her baby on the back. They have this, Ladakis the Pahadis have this habit, right? They don't put their babies on on the cradle. What they do is they put it on their back, they tie it up. Okay, the baby is on her back and she's cooking for me. I was feeling guilty. I was like, you take care of the baby, I will cook for myself. Right? Because I was feeling guilty. These 2 ladies are cooking for me and I am paying 400. I am feeling guilty whether to have or not have now. Later, I paid 2000, I came. I felt guilty. Like, you keep it, it's okay. He's like, no, she was about to give change. I was like, no, you keep it, it's okay. You take care, you do something for the baby. Right? I, out of my own thing, gave more money and came. So what am I trying to say here? Happiness is always relative. They hardly have anything, to be honest. Everything is a struggle. Right? You don't have buses. You'll have to, one bus will come in morning, one bus will come in evening. You hardly have. Most of the time you need to walk, and it's like walking here, this area. Right? Walking 1 kilometer there, no, you'll be like, and all. Okay, so that difficult terrain, but still happily they are living their life. So you don't really need much to be happiness. All comes mind, the way you think, and that's how you're going to be. So now, what is our thinking going to be? We will crack AS3 first too, and we will also crack the exam. Come back to the point. I think we deviated too much. Sorry, recorded, guys. Yeah. All right. Come back to the topic. Which topic we are discussing? Cash flow statement. Now, people, the first thing that we'll have to do in cash flow statement problem is identify which profit is given to you in the question. Which what? Profit is given to you in the question. Sir, can you tell me P&L ka order? In FM we used to have this order, remember? Okay, let me tell you this. Maybe you would have not taken FM from me. Okay. From PBIT means what? Profit before interest and tax. Or you can call it as PBIT, or you can also call it as EBIT. One and the same. From EBIT, if you reduce interest, what are you going to get? Profit before tax. From this, if you reduce tax, what are you going to get? Profit after tax. Yes. And then your appropriation item starts. What are those appropriation? Transfer to general reserve, transfer to CRR, equity dividend, preference dividend, etc., etc. So from this, if you adjust all your appropriation, finally what profit remains comes in your balance sheet as P&L account. Correct? No, the final profit appears in your balance sheet under reserves and surplus. Correct? This, for easy remembrance purpose, I had told it means profit after all adjustments. Profit after all adjustments. Where it will come? Balance sheet. So you usually, especially under indirect method, you'll have to first identify which among this profit is given to you in the question. Which among this profit is given to you in the question. Sometimes they will give you, sometimes they give you PBT. Sometimes they give you PAT. Sometimes they give you profit after all adjustments. First step is to identify which profit is given to you in the question. This is relevant for the indirect method. This is relevant for the indirect method. Okay, do not forget this, because based on this, adjustments will change. So this is the first step. Or let's go one step back. So operating cash flow, I told, can be found out under 2 methods. What are those? Direct method, indirect method. So what does direct method mean? Direct method means the cash flow information is directly given to you in the question. Sir, can you tell me some of the examples of operating cash flows? Some of the examples of operating cash flow. Sir, to operate, what does a business usually do? They purchase the goods, they sell the goods. Tell me some cash items relating to this. It could be cash purchase or cash paid to creditors. It could be cash sales or cash received from debtors. Only this you need, or you need employees and other expense also. Salary paid, electricity paid, rent paid, all these are examples of what? Operating cash flows. Can you tell me some of the examples of investing cash flow? Can you tell me some of the examples of investing cash flow? First, where and all can you invest within the organization? Within the organization, where and all can you invest? PP purchased. If you can purchase PP, you can sell a PP. So that means those are examples of what activity? Investing activity. Only PP or even intangible asset. Intangible asset purchased, intangible asset sold. Examples of investing activity. Then, if you still have surplus money, then you will purchase an investment. Investment purchased, investment sold. On your investment, you get a return. What return? Interest received, dividend received. All are example, or all of these are some of the examples of investing cash flow. Can you tell me some of the examples of financing activity cash flow? Financing activity means the way you raise the finance. How and all can you raise finance? How and all can you raise finance? One, by issuing equity shares. If you can issue equity shares, can you buy it back? Yes. So issue of equity shares, buyback of equity shares, financing activity. Then issue of preference shares, redemption of preference shares, cancellation of preference shares, we call it as redemption. Issue of debentures, redemption of debentures. Or you can raise the finance through normal bank loan. Bank loan taken, bank loan repaid. Yes. On loans and debentures, what will the company pay? Interest. If loan taken is a financing activity, the interest paid on that loan taken is also financing activity. So interest paid on debentures and bank loan is also financing activity. On equity shares and preference shares, what will you pay? Dividend. Not dividend received, dividend paid. Dividend paid is also what activity? Financing activity. These are some of the examples of various activities. Yes. And to find operating cash flow, we have two methods. What are those two methods? Direct method, indirect method. Direct method means all these examples what we discussed, operating cash flow ka information will be directly given, or we can find them out. These information straightforwardly you can find out. If that is the case, means we use what? Direct method. Meaning if cash received from debtors is given, cash sales is given, cash paid to creditors is given, expense paid, etc., etc. If that information, if it is given, then we go for direct method to find operating cash flow. If those informations are missing, but if they give you information about profit, then we go for which method? Indirect method. Indirect method means, direct method means going like this. Indirect method means going like that. But food will go into your mouth only, no? So, correct, no? So, whether you go for direct method or whether you go for indirect method, answer will be same. Indirect method means from your profit, from your P&L, we are trying to find. From your P&L, you are trying to find operating cash flow. That is your indirect method. With the help of P&L balance, we are trying to find what? Operating cash flow. That is your indirect method basis. So that is the reason it's very important to know which profit is given to you in the question, whether it is PBT, PAT or profit after all adjustment. That will vary from question to question. Okay. Now, sir, if you are doing indirect method, can you take P&L itself as operating cash flow? Suppose they give you profit before taxes 10 lakh. Profit before tax is how much? 10 lakh. This 10 lakh only, can I call it as OCF? Why? Sir, how do you prepare P&L? By considering income and expense. P&L will only consider cash expense or even non-cash expense also. P&L will include your non-cash expense like depreciation, amortization also. And what are we trying to find? Operating cash flow. But P&L will include non-operating income, non-operating expense also. That means we'll have to do certain adjustments. So directly profit cannot be adopted as OCF. We'll have to do some plus minus adjustments. That adjustment is dependent on what profit is given to you in the question. Okay, G? That I have summarized over here. So if you want to find operating cash flow under indirect method, first find what profit is given to you in the question. For the sake of simplicity, when I have drafted the chart, I have taken as they have given you in the question profit after all adjustment. They have given you profit after all adjustments. Sir, how will we know whether it is profit after all adjustments, sir? Sir, usually in cash flow statement, what they will do is they will give you balance sheet. They will give you balance sheet, not for 1 year, but for 2 years, current year and previous year. Let us say when they give you balance sheet, they gave you P&L. P&L for last year was 10 lakh. In that balance sheet, last year P&L balance is how much? 10 lakh. Current year it has become 15 lakh. Current year it has become 15 lakh. That means what? From 10 lakh it became 15 lakh means in the current year how much profit have you earned? 5 lakh. Correct? No. Yes, sir. Correct? No. So this is a profit. This is a profit. Sir, in your balance sheet you show PBT, PAT or after all adjustments? After all adjustments. So using balance sheet, if you find out any profit, what sort of a profit is it? It is profit after all adjustments. Done now? So how will we know if it is PBT? Sir, if it is PBT, PAT, no, along with balance sheet, they will also give you whole P&L account. They will give you whole P&L account. You know P&L account ka format, no? Right? That they will give you. Right? In that P&L, you will have PBT also, you will have PAT also. That means it becomes your choice to pick what. Either you can pick PBT and work or you can pick PAT and work. But usually AS3 says you start with PBT. AS3 ka recommendation is you start with profit before tax. That's the usual recommendation. Done. Now for chart sake purpose, I have assumed that what, sir, what profit is given to you in the question? Profit after all adjustments. Now, this profit after all adjustment only, can I take it as operating cash flow or I have to do some adjustments? I have to do some adjustments because P&L will include non-cash items also and it will include non-operating items also. So I'll have to adjust. So the first thing I have to do is if there is any non-cash expenditures, add back. You have to add back what, sir? Non-cash expenditures. Examples of non-cash expenditures are depreciation, amortization. I've given a list over here, but maybe for the sake of simplicity, I'll stick to 1 or 2. Examples of non-cash expenses, depreciation or amortization. It's very straightforward. Depreciation is an expense. Depreciation is an expense. Forget whether it is cash or non-cash. It is a expense. What does expense do to your profit? Due to expense, what happens to your P&L balance? Reduce. So due to this depreciation, P&L balance has reduced, correct? Under indirect method, from profit only you are finding what? Operating cash flow or OCF. Due to depreciation, your profit balance has reduced. If your profit balance is reduced, means indirectly your OCF also has got reduced. Because from profit only we are finding OCF. Due to depre, if P&L balance is reduced, means OCF also has got reduced. But did cash go out of the organization due to depreciation? Did any cash go out because of depreciation? No, unnecessarily your operating cash flow has reduced. So what to do? Add. To restore, we add back. Hence, for all non-cash expenses, we add back. Examples are depreciation, amortization, transfer to reserves, discount on issue of debentures, etc., etc. These are some of the examples. Usually, we find depre and amortization. If they give you a big question, you may find other adjustments also. Now, this is one adjustment. Second, if you have any non-operating expenditures, add back. If you have any non-operating expenditures, add back. Like interest paid, interest or rather interest expense or interest paid. What activity? Interest paid on bank loan, interest paid on debentures. What activity? Financing activity. But interest also is an expense. Where will the expense go to? P&L. Due to this interest expense, what has happened to your P&L balance? Due to this interest expense, your P&L balance has reduced. If your P&L balance is reduced, indirectly your OCF also has reduced. Because from P&L only we are trying to find OCF. Yes, but interest paid is a operating activity or a financing activity? financing activity, but unnecessarily your operating cash flow has got reduced. What to do? Add back. Hence, if you have any non-operating expenditures, you need to add back. Examples are interest paid. Dividend paid is not an expense, but yeah, that also will come here. Okay, and loss on sale of your investment. Loss on sale of investment. Sale of investment is what activity? Sale of investment, sale of PPE, sale of intangible asset, what activity? Investing activity. But loss on sale of these assets will be transferred to P&L. Due to this loss, P&L balance has reduced. So your operating cash flow is also reduced. Are these operating activity or investing activity? Hence, to restore, what we'll do? Add back. Sir, you don't have to give the heading and then do the adjustment. You can simply write add back interest, add back depreciation. Just for our clarity, I've given this particular heading. In exam, you don't have to tell whether it is non-cash or non-operating. Identification of all this is not necessary. You can simply go on plus and minus. Any order is okay. There's no specific order. What AS3 says is start with PBT. Start with PBT. Ideally, what you have to do is you have to put a one working note. One working note, if they have given profit after all adjustments, you have to put one working note so that from profit after all adjustment, first find what? PBT and then do this. Ideally, that's the way we present, but in exam, we may not have so much time. All these are lengthy affair. So everything you do it inside the table only, not a big deal. In class also, we have done it like that only. It's fine. 1 or 2 marks if ICI takes, let them take. After all, mother body. If you give some money to mother, you'll feel bad. No, you'll feel bad at it. Hey, what to throw it in. So 1 or 2 marks if mother body is taking, let them take. Let them also be happy. Okay, no. So don't freak out. It's always time versus marks. Focus on the time. Don't be like everything I will do. If it is time up, you have to leave that question and move forward. Okay, time is very important. Manage that properly in exam. Okay, this is done. Next, third one. What is the third adjustment? If they have any non-operating income, you'll have to minus. Like non-operating income ka certain examples could be interest received, dividend received. Okay, dividend received is what activity? Dividend received, not dividend paid. Dividend received is what activity? Investing activity. Why? Because you will receive the dividend on your investments. If investments are investing activity, the interest received or dividend received is also investing activity. But interest received, dividend received is an income. Due to that income, what will happen to your P&L balance? P&L balance will increase. P&L balance will increase. If P&L balance increases, your OCF also will increase, because here from P&L only we are trying to find OCF. So due to this adjustment, OCF has increased. Are they operating activity or investing activity? So what to do? Minus. So all these adjustments, if you have, you need to minus. Done, people? Then the last effect you need to give is working capital changes. You have to give an effect called working capital changes. Increase in current asset means minus. Decrease in current asset means plus. Increase in current liability plus. Decrease in current liability minus. Sometimes instead of this, directly they will give you working capital. Some problems where directly they will give you working capital. Working capital is nothing but current asset minus current liability. If they give you increase in working capital minus, decrease in working capital means plus. I told you the logic for all this in regular class. Why do we do this plus minus? No time, so I will not go into that. But you need to remember these sort of things if you don't know the logic. If you know the logic, you can use what I've told there in regular class and apply. Okay. So what is this increase decrease, sir? Very simple. As I told you, in cash flow statement question, they will give you balance sheet. Only for current year or also for last year? Last year. Last year ka closing balance becomes current year ka opening balance. So essentially they have given you 2 years data, which is nothing but capturing what? Opening balance and closing balance. Because last year ka closing becomes current year ka opening balance. So what you have to do is, let us say the opening balance of debtors is 1 lakh given in the question ka balance sheet. Assumption. Current year balance sheet says the value is how much? 70,000. Okay. 1 lakh has become, at the year beginning, how much it was? 1 lakh. At the year ending May, it has become 70. So what has happened? It has decreased. This is what we mean by increase or decrease. or this is how you calculate increase or decrease. Compare the opening balance with closing balance. Accordingly, you will get to know whether it has increased or whether it has reduced. 1 lakh has become 70 means this is a case of what? Decrease. This is a case of decrease. Yes, so yes. So how much it has decreased by? 30,000. Decrease in current asset means add back. Or if you are confused with the formula, if you forget plus minus, okay, construct this way. Use your common sense. Year beginning mein how much our debtor had to pay us? 1 lakh. At the end of the year, he has to pay us or we have to collect from him 70. That means what? 30,000 we have already. 30,000 we have already collected. Collected means inflow na outflow na? Inflow. Inflow means negative or positive. Positive. That's the reason we say decrease in current asset means plus. This is not the exact logic. Logic I've told you in the regular class, but this is a simple way to remember what to be plus, what to be minus. But when you construct a simple example, you will get to know this. Done, Aji? Once more, Aji, or got it, Aji? Sir, first do this adjustment, then you give capture of working capital changes. Last may we give an adjustment called tax paid. Last may we adjust tax paid. It will be given to you in the question or we can find this out. Tax paid, can be operating, investing or finance. Because when you sell an investment also, you may have to pay some tax. LTCG, long-term capital gain, short-term capital gain. So tax can be operating, investing or finance. But if they don't give information, if they don't give any information, tax paid, we always put it under which category? Operating cash flow. Because the majority of the tax which we pay to the government is based on our operations. Hence, as a thumb rule, we show always tax under operating activity if information is not available. If they say this tax is a LTCG, then we have to show tax under investing activity. Suppose you are paid dividend tax, dividend distribution tax. It is abolished now, but if at all they give, when you pay a dividend, dividend paid is what activity? Financing activity. So on that, if any tax is getting attracted called corporate dividend tax or dividend distribution tax, you'll have to show it under finance. If no information is given, then it will come under operating cash flow. This is one adjustment, or this is a summary of what we do under indirect method. Next so next are certain adjustments you need to be aware of. These are all small concepts which has an impact on cash flow statements. That doesn't matter whether it is direct or indirect, it will have impact on both the methods. So the first important adjustment which we see almost in every question is around depreciation. People, there are two ways of accounting depreciation. What did I say? There are two ways of accounting. I'm not talking about method of calculating depreciation. No. Method of calculating depreciation means your straight line, WDV, blah, blah. I'm not talking about that. I'm talking about two methods of accounting depreciation itself. One we call it as charge method, another one we call it as provision for depreciation, or another name is accumulated depreciation. Charge method or provision method. Company is free to choose how they want to present it. Either they can go for charge or they can go for accumulated depreciation, their choice. Now, if charge method is followed, what are the journal entry for depre, sir? What is the normal journal entry for depre we pass? Depre account debit to asset account, and that depreciation we transfer it to P&L. If you are doing that, we say you are following charge method. If we are passing entry like that, we say we are following what method? Charge method. There is another method called provision for depreciation method or accumulated depreciation method. Here what we do is we debit depreciation, but instead of crediting asset, we park depreciation in one account. We park all depreciation in one account called provision for depreciation. Now tell me the journal entry for depre here. Depreciation account debit to provision for depreciation. Depreciation is still an expense. Where will that go to? Second entry is instead of crediting asset, we credit what? Provision for depreciation. If company is following this, we say company is following provision method. Any problem? No. Now the importance of this method is check, sir. Are you debiting or crediting asset anywhere here? in this method में are we touching asset का ledger or we are not touching? Not touching. So whenever provision for debris method is followed, asset का ledger balance, asset का plant and machinery or PPE का intangible asset का ledger balance will always be maintained at OC. What is OC? Original cost. If you go for this method, asset ledger will always be maintained at what? Original cost. Why original cost? Because all depreciation is going to asset account or provision for debris account. Provision for debris account. So asset ka ledger balance will never come down. It will always be there where? At original cost. Done. On one side may you will have asset shown at what amount? Original cost. On another side may you will have provision for depreciation account which will have a debit balance or credit balance. Credit balance. This is how you will maintain two ledgers here. Asset also, provision for depreciation ledger also. Okay, Saru. That's how this method works. Can I talk further? Now people, how long should we maintain provision account? 1 year or 2 years or 5 years or 10 years or 20 years or how many years? Sir, till that time asset is there. Till that time asset is there. That asset ka provision for debris also should be maintained. If that asset is derecognized, if that asset is cancelled, you wrote it off, you sold, or you gave it on finance lease. When you give it on finance lease, lessor will derecognize the asset and show it as receivable to the extent of net investment. We learnt yesterday only, no? So like that. So whenever asset is derecognized, whenever asset is cancelled, that asset ka, specifically I'm using that stress, see where I'm placing the stress, that asset ka provision for debris should be cancelled. Once again, as long as the asset is there, provision for depreciation also will continue. If that asset is cancelled from your books, then that asset ka provision for debris also should be cancelled. Done now. Provision for debris has what balance? Credit balance. How do you cancel it? Debit it. Asset has what balance? Debit balance. How do you derecognize? Credit it. What is the entry then? When the asset is derecognized, the entry is provision for debris to PP. Two more will come, but anyways, just saying this entry is comfortable for you. Now people, whenever they give you provision for depreciation or accumulated depreciation, sometimes it will be given inside the balance sheet, sometimes they give you in additional information. But whenever they give you provision for depreciation or accumulated depreciation information in the question, prepare one ledger. What ledger? Provision for depreciation ka ledger. Now why do we prepare that? First of all, provision for depreciation account has what balance? Credit balance. It's like your creditor. Creditor, you can think like that. Don't say it is creditor. Just for your easy remembrance sake, you can think of it like creditor. Creditor ka opening balance where it will come? Credit side as what? Buy balance, brought down. Closing balance, to balance, carried down. Yes, sir. Now when asset is cancelled, provision need to be maintained or cancelled? What entry? What entry? Provision for debris account debit to asset. So in provision ledger, what will be the posting? To asset account. That asset is usually PP. It also could be intangible asset also. Okay, see? Okay, Saru? Now, this ledger will not match. There will be a balancing figure. To get that balancing figure only, you prepare this ledger. What is that balancing figure? Can you tell me? Current year ka depreciation. Because what is entry for depreciation under this method? Tell me the entry again. Depreciation account debit to provision for depreciation. That means you will post here as what? By depreciation. So if current year ka depreciation, if it is not given to you in the question, if current year ka debris is not given to you in the question, by preparing this ledger, what will you get? Current year ka depreciation. That is the intention of preparing this particular ledger. Okay, Saru? So whenever they have given information, prepare this ledger to be on the safer side. So you should write by depreciation. Now, why have you written by P&L? Where will debris go, pa? Where will depreciation go to? P&L. Either write by depreciation or write by P&L, one and the same. To get this as a balancing figure, we prepare this particular ledger. Understood? We'll apply it in one question, but theoretically, is the discussion making sense? Okay. The next adjustment we need to be aware of is dividend. Proposed dividend or dividend payable, final dividend, they'll give many names. It's fine. So dividend you need to be little aware of. What they will usually do is in cash flow statement, they will give you how many years ka balance sheet? 2 years ka. So when you see that balance sheet, no, you will see in your current liability side, they will say proposed dividend or some dividend payable, some name they will give. Okay. Let's say last year it was 1 lakh, current year, let's say it is 1.5 lakh. Like this, they will give. Okay, Ji. This date, some number will be there. That's all. They will not give you any other adjustment, no other information. Only this information about dividend will be given to you. Now, what we have to do here? Okay. Now, people, we have already studied company law. We know that dividend once declared has to be paid within 30 days. Yes. This 1 lakh is which year ka dividend? Current year ka or last year ka? This is last year ka dividend. Sir, last year over. Current year also over. You will keep this dividend outstanding or it will be settled. It will be paid off. Yes or no? That means what is the assumption, you tell me? If, perfect. If only opening and closing balance of dividend, if it is given to you in the question, means the assumption is previous year ka dividend is assumed to be paid in the current. Because you can't keep it outstanding for the whole of the year. It has to be settled within 30 days. Otherwise, you have to transfer it to separate bank account and all. Company law says no. So that's the assumption. So last year dividend of 1 lakh is assumed to be paid off. And what is this 1.5 lakh? Sir, dividend you will declare only once or you will go on declaring. You may declare every year also. No, that is company choice, right? So what is this? Current year ka dividend declared. If you want the entry also, what is the journal entry for dividend declared? What is the journal entry for dividend declared? Dividend you will declare out of your profits. When you declare dividend, P&L balance same or it will reduce. P&L has profit means P&L has credit balance. Due to dividend, P&L balance is reducing. So what entry? P&L account debit to proposed dividend, final dividend, dividend payable, whatever name you want to give. Correct? Huh? This is a journal entry for dividend declared. When the dividend is paid or settled, what entry? Dividend payable account debit to what? To bank. Okay, Naji. Fine. Now prepare, whenever this dividend account is given to you in balance sheet, prepare dividend ka ledger. So tell me, when you prepare the ledger, what you will do? This where will you post? This where will you post? Previous year ka closing balance will become current year ka opening. Current year ka is the closing. Tell me, sir. Dividend payable is a liability. Liability ka opening, liability ka closing. Where it will come? Liability ka opening balance will come on the credit side as buy balance, brought down. Closing balance of this liability will come on the to balance carried down. Yes, sir. Yes. When a dividend is paid, what entry? Dividend to bank. When a dividend is declared, what entry? P&L to dividend. Here you will post it as what? By P&L. Either to get this as a balancing figure or to get that as a balancing figure, we prepare the ledger. 3 information will be given, or usually in these sort of problems, they will not give you 3 information. They will only give you what? Opening and closing. So what will you assume? This opening is paid off. This opening is paid off. So you will write here to bank 1 lakh. Okay. If you want, I'll post this only into the ledger. What is the opening balance value? So you'll write buy balance brought down how much? 1 lakh. What is the closing balance? 1.5 lakh. So you'll write buy balance to balance carried down 1.5 lakh. This is assumed to be outstanding or paid off. What entry? To bank how much? 1 lakh. This side total how much? 2.5. This side also should be how much? How much should come? 1.5 balancing figure. What is that 1.5? Current year ka dividend declared. This is what we do for dividend. Yes, Sasaru. Yes. So in one word, what is the takeaway? Opening balance is assumed to be paid off. That's it. When will you do this? When information is not given, or rather only 2 information is given. What 2 information? Opening and closing. Okay. If information is given, suppose, sir, if they say dividend paid is 70,000, dividend paid is 70, then take only how much? 70. If information is not given to you in the question, then only we assume what? Opening balance is settled. Okay. If how much paid, if it is given to you in the question, then take that information. Accordingly, this balance also will change. If this is 70, I mean, this will not be 1.5, it will be 1.2, like that. It will change. Okay. Understood? Pakana. Sir, this assumption what you have made for dividend, no, same assumption holds good for one more component called provision for tax. For provision for tax and for dividend, the assumption is same. What assumption? If only opening balance and closing balance is given, then opening balance is assumed to be paid off in the current. That assumption. This is another adjustment. Same thing, I've bought provision for taxation ledger also for your reference here. Same drama, no change. Okay. Sir, another point you need to be aware of when you're preparing cash flow statement is under indirect method, you remember working capital change is something we discussed. Can you tell me the formula once again for me there? Increase in current asset means minus. Decrease in current asset means plus. Increase in current liability plus. Decrease in current liability minus. Yes. So as far as, listen to this carefully, as far as indirect method is concerned, for current assets and current liability, which are related to operations, we only compare opening balance with closing balance and find out whether it has increased or whether it has decreased. All other adjustments are ignored. All other adjustments like bad debts, discount given to debtors, discount received from creditors. Some problem they will give you all this. What should we do? Consider or Buddha zone? Buddha zone. You don't have to worry about that. Where? In indirect method. Because all that is indirectly already adjusted. I proved it to you with logic in regular class. Why they should be ignored. Now I'll not go into that. I'll just tell you what needs to be done. What needs to be done? Consider or ignore. So if they're giving you bad debts on all that, you don't have to worry. For debtor, the only thing you need to be aware of is what? Compare opening balance with closing balance and see whether it has increased or whether it has reduced, and put it where? Put that increase or decrease where? Under operating cash flow, specifically under what heading? Working capital changes. As simple as that. All others have already gone. That's one. Another hidden adjustment is, sir, in the balance sheet, no, they will say 10% bank loan. They will say 10% bank loan or some debentures. Let us say current year 10 lakh, last year 8 lakh. Or maybe let's make both the values same for simplicity purpose. Last year also 10, current year also 10. That means, have you issued more debentures in the current year? No. Last year also 10, current year also 10. Any more debentures have you issued? No. Have you repaid any bank loan or debenture? No. Balance is same. So they will not give anything in the adjustment. They will not give anything in the adjustment. But one hidden adjustment is still there. What is that? The moment they give you 10% bank loan, what does this 10% mean? Interest. So do not forget to account the interest. So what do you have to do for interest? First of all, calculate interest for me. 10 lakh ka 10%. How much is that? 1 lakh. Interest paid. What activity? Interest paid. What activity? Financing activity. So that means under financing activity, you have to do what? Plus or minus. It's a cash coming in or cash going out. That means under financing activity, you will deduct what? 1 lakh. Yes, sir. Under operating activity, what you will do? Interest is an expense. Expense has gone where? Expense has gone where? P&L. Due to this expense, P&L balance has reduced. If P&L balance is reduced, operating cash flow is also reduced. But interest paid operating or financing activity. Hence what to do? Add back. So in operating activity, you have to plus 1 lakh. That means net may the effect is what? 0. Cash flow statement will match. Even if you don't do this, cash flow statement will match. But 2 marks going down. Because examiner will look for this adjustment. Okay. So do not forget that hidden adjustment when they give you percentage interest anywhere. If percentage is not given, then we can't find out the interest. Only if percentage is given, then there is a hidden element of interest. Do not forget that. So these are some of the theory pointers you need to be aware of when you prepare cash flow statements. Can we take up some questions to get our understanding a little better? Okay, first we will do direct method. Okay, people. Question number 11 in a class notes. It's a study mat question again. You need to prepare cash flow statement of Gamma Limited for the year ended 31st March 20x1 from the following information. Sales is how much? 135. Out of this, 60% is cash sale. So 60% cash means balance 40 will be credit. Now sales information, if you just check here, sales info, purchase info, expense paid information missing or given. If it is given, should we follow indirect method or direct method? In indirect method, mein, all this information will be missing. Is it missing or given? If it is given, we will follow what method? Direct method. Sometimes question only will say. If they don't say, if info is given, always take what? Direct method. One by one. All right. How much is cash sales, sir? 135 into 60%. How much? What activity is cash sales? Operating activities. Under operating activity, you will write cash flow from operating activity. You will write cash sales 60%. How much? 81 lakhs. Clear? Okay. Sir, if 60% is cash sale, 40% is credit sale. Calculate credit sales. 135 lakh of 40%. How much? 54. So usually amount received from debtors will not be given. Amount received from debtors will not be given. Sir, if you know opening balance of debtors, if you know closing balance of debtors, if you know credit sales, can't you find out cash received from debtors? How? You can prepare a ledger or plus minus also is okay, but I always prefer the ledger. What's the journal entry for credit sales? Debtors to sales. So in your debtors ledger, post the credit sale. How much is credit sale you said? 135 lakh of 40%, which is 54. As in when we see the information, go on reading. Okay, sir. All right. Next, sir, one easy way to prepare cash flow statement is first have cash flow statement ka format. Draw a format. Anyway, cash flow statement you prepare under 3 categories. What is that? Operating, investing, and finance. Usually, operating cash flow will have a lot of adjustment. You can probably leave around 15-20 lines for operating cash flow. Maybe one page fully you leave for operating cash flow. No problem. Okay. Next page, may you start with what? Investing cash flow. Leave around some 6-7 lines. Then you prepare what? Financing cash flow. The format you do. Okay. So that way, what happens when you read the question? ICI, they will not give first all operating cash flow item. Usually it will be one operating, one investing, one finance. Like this, they will mix. Chow chow baat. Mixture will be there. Khichdi will be there. So when you have a format, as in when you read the adjustment, you can go on capturing under respective bucket. So it will be, you will be able to solve the question faster. Okay, next. Purchase is how much? 55. Out of that, credit purchase is how much? 80%. If credit is 80 means cash will be 20. 55 into 20 is 11 crores. So cash purchase, where it will come? Operating cash flow mein cash purchase 11 crore. Credit purchase, what is the journal entry? Purchase account debit to creditor. So in your creditor ledger, you will post it as what? By purchases. 55 ka 80%, which is 44. Next one. What is the next one? Admin expense paid how much? 18 crore. Salary paid how much? 22 crore. Both are what activity? Operating activity. Inflow na outflow na? Outflow. So both should be shown as plus or minus. 18 and 22 under operating cash flow. 18 or 22 minus. Okay, next. What is the next one? Company redeemed the debentures. When company issues debentures, money will come in. When company redeems the debentures, money will go out. How much redemption value? 20 crore. But did you redeem it at 20 crores or premium? How much premium? 10%. So how much are you paying? 20 crore plus 10%. How much is it? 22 crores you need to pay, but don't be in a hurry. Total payment is 22 crore. How it is paid? Check. Debenture holders were issued equity shares of 15. So out of 22 crore, 15 crore was settled by equity shares. So for this 15 crore, cash came in, cash went out, or no impact? No impact. So will this 15 crore come in cash flow or statement, or it will not come? It will not come. What about the balance? How was balance settled? The balance was paid in cash. So out of 22, 15 through equity shares means balance will be 7 crore settled through cash. When I say cash, it means banking channel only. Cash for this purpose means cash in hand as well as cash at bank. Will this come in cash flow? Will this come in cash flow statement? No. This one? No. This one? Yes. Where will 7 crore come? Issue of debentures, redemption of debentures. What activity? Financing activity. And the financing activity, positive or negative? Negative. Shown as negative. Check. 7 crore negative here. Okay. Next. What is the next one? Interest. Debenture interest paid during the year. How much? 1.5 crore. Interest paid on debentures. What activity? Plus or minus? Financing activity 1.5 minus. Consider. Next. Dividend paid 11.7. Dividend paid what activity? Financing activity 11.7 minus. Taken. This is your financing activity. Next. What is next? Investment which is costing 12 crore were sold at a profit of 2.4. It costed this much, but by selling we made how much profit? 2.4. So what is your selling price? 12 plus 2.4, which is 14.4 crore. Sale of investment, what activity? Investing activities. Which amount should come? 12 2.4 or total sale value? Total sale value should be shown under investing activity as negative or positive? Positive 14.4 under investing activity. Next, 8 crore was paid for income tax. Income tax paid what activity? Operating. Under operating activity, 8 crore last line item they would have shown here. Income tax, it's a payment, so negative. Next, new plant costing how much? 21. It was purchased, but by paying cash or through exchange of old plant. Barter system. Old one you are giving, you are buying the new one. Old ka book value how much? 12. Do you think it has to be exchanged at book value or agreement value could be different? Book value of the old plant was 12, but vendor took over old plant only at 10. Vendor took the exchange value as only 10. So, new ka value is how much? 21. You gave away old ka value was considered as how much? 10. So, how much extra cash you need to pay to the vendor? Out of 21 crore, 10 crore was adjusted for old plant. Balance is how much? 11 crore. 11 crore you have to settle by cash. Will this come in cash flow statement? Old plant ka barter. Cash coming in here, cash going out? No. How much cash coming in or going out? 11 crore. Will this come in cash flow statement? Yes. As what? Negative. Where? This is for PP purchase. PP purchase what activity? Investing activity mein 11 crore minus. Show now. This is your investing activity 11 crore minus capture. Next. What is the next one? That's it. Okay. Debtor ka check the balance. Sometimes they will interchange the balance. First they will give you opening and then they will give you closing. Sometimes they will reverse the order. First they will give you closing and then the opening. So whenever this data is given, first pay attention to the date. 1st April 20x0 and then they have given 31st March 20x1. So this is OB and this is closing balance. Debtor ka opening how much? 45. Closing 50. Where will opening balance be posted? As what? To balance brought down 45, by balance carried down 50. If you just check, these three informations are available. If you add these two, total is 99. This side it is not 99. There is a balancing figure on the credit side. What can come on the credit side of debtors ledger? Don't say bad debts, pa. You have sold 54 crores and 49 crores is bad debts. No, that means what is it? Amount received from the debtor. What's the journal entry for money received from debtors? Bank to debtors. Given or calculated as balancing figure. Will this come in cash flow statement? Yes. Where? Operating cash flow. Negative, positive? Positive. Same way. Creditor ka opening balance 21. Closing balance 23. Where will 21 opening balance come? By balance brought down 21. To balance carried down 23. These two ka addition is 65. Ledger is not matching. There is a balancing figure of 42. What is that 42? Amount paid to creditors arrived as a balancing figure. Will this come in cash flow statement? Yes. Where? As what? Negative 42. If you check, I think last they have given opening balance of cash, closing balance of cash. This is a category. Okay. So when you do all this plus minus, if you just check everything we have ticked off, when you do plus minus, you will get the net cash flow from operating activity. Sir, if this number is positive, if this number is positive. That means we have utilized the cash or generated the cash. Generated. If it is positive number, we say net cash flow from what? Operating activity. If this by chance, if this number is negative, then we say we have not generated money from this activity, rather we have spent money for this activity. Or if you don't want to worry about it, simply write like this: net cash flow from, in bracket may you write used. So you write both so that you are telling the examiner, I know both, you pick whatever you want. Okay. From what activity? Operating. This we'll call it as A. Similarly, net cash flow from financing activity, how much? Positive. That means it is net cash flow used or generated from. Financing activity, it is negative. So what is it? Net cash flow utilized. All these three numbers you plus minus you do. Plus minus. If you do, you're getting 12.2. Correct. That we call it as what? This 12.2 is what? Negative or positive? So from all the three activities put together, we have utilized the cash or generated the cash. Generated the cash. How much? 12.2. Okay. To this number, you have to compulsorily add opening cash balance and compulsorily get closing balance. If you don't get, somewhere you have done something wrong. Opening and closing must be given to you in the question. Check. What is opening cash balance? 6. Closing is 18.2. From 12.2, add opening balance of 6. How much are you getting? 18.2. And what was the closing balance given in the question? 18. That means what you have done is right. That's how to test. So most of the thing will be given in the question only. But you just need to be a little careful when you're putting up the solution. That's all in cash flow statement. It can be lengthy for sure, but it is not difficult. You need to be a little more vigilant because small information can have a big impact. This is your one question illustrating how a direct method works. Can we take up one indirect method now to understand that a little better? Okay. Maybe let's take first two. It's already 1 hour. Okay. Maybe let's take this. This question has some adjustment. So let's do this. After this, we will see if we have more time. I will take 1 or 2 more. Otherwise, enough. What? Balance sheet also there. P&L also there. Both are there. Okay. Ryan Limited has given you the following information as on 31st March 20x1. This is another format of preparing P&L. From sales, if you reduce COGS, you will get GP. From GP, if you reduce operating expense, you will get another way of presenting P&L. Okay, in India, we don't follow this, but Europe, they follow this presentation. All your ACCA course will have this particular P&L presentation. But maybe this question is copied from, I don't know. Maybe that's the format. I don't know, right? But anyway, whatever they have given, let's take it. Now people check. They have given, these are all some of the incomes and these are all some of the expense. From income, if you reduce all the expense, you're going to get profit before tax. From profit before tax, if you reduce the tax expense, you will get profit after tax. Done now. Sir, the moment you see P&L, direct method or indirect method? Indirect method. Because all that cash received from debtor or expense paid or information will not be given. But rather what they will give you? P&L. What I told in indirect method, the first thing is to identify which profit is given to you in the question. Sometimes it will be PBT, sometimes PAT, sometimes profit after all adjustment. Sometimes all the three will be given. When all the three is given, you will always first prioritize what? First priority always for PBT. Here PBT is available. Yes. How much is that? 23,000. Start with that. Where? Profit before tax, how much? 23,000. Start with that. All right. Now people make me happy. Can profit before tax itself be OCF or we have to do some adjustments? What adjustments? Non-cash expense like depreciation you add back. Non-operating expense like interest and all you add back. Non-operating income like interest received, dividend received, profit on sale of investment, etc. you minus. So one by one we will go. We'll start from here. We'll do bottom up approach. Bottom up, I said. Early morning, where and all you're interpreting. Loss on sale of plant, how much? 3,000. Loss has gone to P&L. What does loss do to your profit? Reduces. Yes. But sale of plant operating activity na investing activity. Investing activity. But it has already reduced your profit. If P&L has reduced means operating cash flow is also reduced. But is it operating activity or investing activity? Hence what to do? How much? 3,000. Check. Have they added back 3,000? Yes. Okay. Next adjustment. Gain or profit on sale of investment. Gain on sale of investment. What activity? Investing activity. But this gain is transferred where? P&L. Due to this, what has happened to P&L balance? Due to this profit or due to this gain, P&L balance has increased. That means your OCF also has increased. It is operating activity or investing activity. So what to do? Reduce. How much? 12. Have they reduced down? Yes. Next. Interest income received. Interest received what activity? Investing activity. But there's an income. Due to this income, P&L balance has increased. So your OCF also has increased. But it's an investing activity. So what to do? 6,000 we have to minus. Have they minused? Yes. Next. No order. You can do it in any order. Interest expense paid. Interest paid what activity? Financing activity. But interest expense is an expense which has been transferred to P&L. Due to this, what impact in P&L? P&L has got reduced. So OCF also reduced. But it is not an operating activity, but a financing activity. What to do? Add back. How much? 23. Have they added back 23? Yes. Next, going up. There is a depre. Total operating expense is 147. In this 147, how much depre is included? 37. Depre is a non-cash expense. What should we do for non-cash expense? Add back. Have they added? Yes. So from P&L, all the adjustments we have done. Yes or no, sir? Okay. But always, okay, maybe at the end may I'll tell that. So far all this we have captured. Let's move on to the next statement. So as I told always, and especially in these bigger problems, no, when you're doing indirect method, the how I feel you should approach the question is, usually what they'll do is they'll give you P&L, they'll give you balance sheet, and they'll also give you some additional information. What you have to first to do is quickly review additional information. No need for detail, just quick revision. See, when you do quick revision, I see something about investment, something about plant, something about bond, something about shares, something about dividend. That means for these, I may have to prepare a ledger. For these, I may have to prepare a ledger. For the rest, I can straight away capture. So quickly you read and figure out what and all accounts has some adjustments. Don't capture them directly. Prepare them through ledger. Others you capture directly. So what are the things we need to prepare ledger here? Investment, plant, bond, maybe shares, maybe dividend, maybe 5 ledgers. Rest everything is straightforward. So with this in mind, if I read a balance sheet, I'll have a better clarity. Okay, go back to the balance sheet. This balance sheet information basically. Now, first observation, they gave plant, they gave your favorite accumulated depreciation. Now, we have two methods of accounting depre. What are those? Charge or provision for depreciation. Provision for depreciation ka another name is accumulated depreciation. Here, accumulated depreciation data is given. Yes. So, charge method, accumulated method. Accumulated method. Whenever accumulated method is maintained, what is our theory? Let's revise our theory. Whenever provision for depreciation or accumulated depreciation method is maintained, PP ka ledger will always be shown at original cost, because all depre is going to which account? Provision for depre account, correct? Sir, forever should we maintain this accumulated depreciation ledger? No. Till the time asset is there, provision for depreciation also should be maintained. If that asset is de-recognized, then that asset ka provision for depreciation also you will de-recognize. This is a ledger. This is our concept. Okay. Now, here we will prepare two ledgers. What are the two ledgers we'll prepare? Plant ledger, accumulated depreciation ledger. So again, this they will always interchange the order. Always pay attention to the dates. Directly don't start. Just because you see first data is not opening balance. They will keep juggling the order here. Check. They have given 31st March 20 X1. Then they have given 31st March 20 X0. So this is your opening balance. This is your closing balance. So watch out that. Okay. Hurry, because if you change this, Though you have done everything correctly, nothing is correct. Yeah, we have seen students doing this mistake also. Then they will come back and correct cash flow statement 10 marks. They give me 0 marks. Hey, you did everything wrong, da. Sir, it's only this interchange, no, sir. Sir, if you change this, the whole data will change, no. Then how will the invigilator give marks, sir? Every working note will be same or it will differ. Small thing, but 10 marks go in there. That's the difference between passing and failing. All this creativity you will know only when you write the paper once, not in the exam. First write in the house. Okay. Exam hall mein you should write the exam only once. In your house may write the papers, practice it multiple times so that examination hall activity happens only once. If you don't practice enough times in exam, you have to practice enough number of times in exam hall. You decide what you want. ICI has, this is probably one of the course in India where there is no reservation quota system illa. Ledu. Kadiyadu. If you prepare, you pass. No preparation, CA for you is not chartered accountancy, CA for you is come again for exam. So you decide what you want. Okay. Nobody will come out of this exam unprepared. Trust me on that. Okay. So you will have to prepare. The question is which attempt you will prepare and which attempt you will pass. My wish and blessing is that it happens to you in first attempt only. But it's totally in your hands. Okay. Without preparations, don't go for shortcuts. Don't go for all that. This I will skip, that I will skip. Prepare properly. Trust yourself. You will crack. That's all. Okay. Proceed. Plan to. What is this now? This is OB or CB? This is CB. This is what? OB. Let's capture that. Let's open plant ka ledger. I think I have it here. I used my kidney. I wrote all this and came. Who will solve? Solving will take 1 hour. Opening balance, how much pa? 505. Closing 715. Opening balance, where it will come? To balance brought down 505. By balance carried down 715. Yes, sir. Next, accumulated depreciation, or also known as provision for depreciation. This ledger will have a debit balance or credit balance. You can think of it like what? If you're confused where to put, you can think of it like a creditor. Creditor ka opening, where it will come? Credit side. How much OB? 68 opening balance, 103 closing balance. Captured. Next. Okay, this minus this is this value. That is fine. Investment. Was there any adjustment for investment? Yeah, I think we saw, no? Some adjustment was there. So we will prepare a ledger. Opening how much? 127. Closing. Opening, where it will come? To balance brought down 127. Closing is 115. Yes, sir. Next. Inventory. Inventory trade receivables. Where it will come? Indirect method. Indirect method mein these operating current assets, operating current liability, where it will come? Working capital changes. Should we have to worry about bad debts, discount on debtors, blah blah, or only opening closing comparison? How much opening? 110. How much closing? 144. Decrease or increase? How much increase? What is the difference of these two? 34. Increase in current asset means minus. So 34, what you have to do? Minus. Under where? Working capital changes. Somewhere they would have put pa. Here. How much was that we got? 30? 34 minus. Have they done? Yeah, here. Okay, next. Next is what? Debtors. Opening. Opening 55. Closing 47. Plus increasing or decreasing? Decrease by how much? 55 has become 47 means it has reduced by how much? 8,000. Decrease in current asset means add back. How much? 8,000. Done now? Yes. Done. Okay. Next. Cash. Cash we have end mein. Opening cash balance and closing. Opening is how much? 15. Closing is 46. End mein. Opening is 15. Closing is 46. Format will capture that. Yes, no? Next. What is next? Prepaid expense. Opening 5. Prepaid asset. Prepaid expense is also current asset. Opening 5. Closing 1. Increased or reduced? Reduced by how much? 4. Decrease in current asset means plus. Where you will add back? Working capital changes 4 added back. Yes. Next. Share capital. I think share capital there was an adjustment. I think they will simply say shares are issued. Okay, check if you want. Opening how much? 315. Closing? 315 has become 465, means share capital has increased by how much? 1,50,000. Sir, how can share capital increase? When you issue the shares. If you want, you can read that adjustment also. How much you said? 1,50,000. Check this adjustment. We have issued 15,000 shares of 10 each. So how much money? 1,50,000. How much did we get here? Adjustment also done. Component also figured out. Issue of shares and money received. What activity? Financing activity. Negative or positive? Under financing activity, issue of shares 1,50,000 plus. Yes. Next. What is next? Reserves and surplus. Sir, we need reserve. If they, in these sort of problem, if they give reserves and surplus, it is always P&L. Right? From P&L, from balance sheet, if you pick P&L, from balance sheet, if you pick P&L, what will you get? PBT na, PAT na, profit after all adjustments. Profit after all adjustment. Should we have to pick this from balance sheet, or we already got our profit? We already got our profit. We took what? PBT. Yes, no, sir. Because they had given. If this data was not given, if this table was not given, what we would have done? If this table was not given, then we would have assumed this reserves and surplus to be what? P&L. Opening balance of P&L was 132. Closing has become 140. 132 has become 140, means P&L has increased by 8,000. What is that 8,000? Current year profit after all the adjustments. That is what we would have done. Is it necessary in this problem to do like that or not required? Not required. Why not required? PBT is given to us in the current question. So this one is not required. You fall to useless information. Next, bonda. Right, bonda, I think we had some information. So let's prepare what? Ledger. Opening how much? 245. Closing? Bond is a liability, no? Liability ka opening balance, where it will come? Liability ka opening balance, credit to closing balance, debit. Captured. Next, trade payable. Trade payable, outstanding liability. Both are current liability, comes under where? Working capital changes. Opening how much? 43. Closing how much? 50. 43 has become 50. So decrease or increase? How much increase? Increase in current liability means plus where? Working capital changes 7,000 plus captured. Yes. Next, outstanding liability. Opening 9, closing 12. Increase by how much? 3,000. What we have to do? Add. Have they added 3,000? Yes. Income tax payable. Just now we discussed. You remember, they can call income tax payable or they can call provision for tax. What is the theory we learned? If just opening and just closing is given, then we assume that the opening balance is assumed to be paid in the current year. Correct? Pakka na? Wrong. Why wrong? Think and tell me. What, macha? No. Correct. But that assumption you can't make in the current year. Is in this problem I'm saying why. Sir, you forgot about last table. In last table mein there is income tax. So what is this? Current year ka provision for tax. So means info missing or info given. When given, you have to take it properly. If this information, if it was not given, if this information was not given and just opening and closing balance was given, then what you are thinking is right. But here three informations are given. What are those? Opening, closing and current year ka provision for tax. So that assumption what we wrote in theory will not hold good in this problem. Got it? So we'll have to prepare what to? Ledger. First prepare ledger. Opening how much? 5. Closing how much? 3,000. Provision for tax. Where are you? Opening balance, by balance brought down 5. Closing balance 3,000. Yes. Now in P&L, if any tax comes, if in P&L if any tax comes, that is tax paid or provision for tax? Provision for tax. Why? What is the journal entry for provision for tax? P&L account debit to provision for tax. So the tax that appears in your P&L is provision for tax, which is how much in this problem? 7,000. I mean, this journal entry is passed for how much value here? 7,000. Clear, Sarji? In provision for tax ledger, you will post this entry where? On the credit side is what? By P&L 7,000. Hanji. Total G. These two are total how much? 12. This side also should be 12. Matching balancing figure. How much balancing figure? 9,000. Calculated or balancing figure? What is that? You only make provision and keep quiet, or you also pay? Pay. What is the journal entry for tax paid? Provision for tax to bank. Fine. Okay. This 9,000, will it come in cash flow statement? Yes. Where? OCF. Beginning May, ending May. Ending May 9,000 they must have taken. Income tax paid 9,000. Okay. You can calculate this in a statement plus minus format or ledger format, your choice. Or P&L captured, balance sheet captured. Check. Now when I do this approach, should I have to go back to P&L? Should I have to go back to balance sheet? No, because I have all my format. So when I follow this format approach, when I already have format, I don't have to read the question again and again. I can go on proceeding. Now only thing I need to capture is what? Adjustments or additional info, one by one. You purchased investment for how much? 78. What is the entry? Investment, we are preparing a ledger. So what entry? Investment to bank. In investment ledger, you will write to bank. How much? 78. First, let's close the ledger and then push the information into cash flow statement. Next adjustment. Sold investment for 102. What is the entry for investment sold? Bank to investment. So the posting will be by bank 102. Yes, sir. Okay. We sold the investment for 102, but the cost was how much? 90 was a cost, but we sold it for 102. What is the profit? 12,000. Yes. That profit of 12,000 we have already adjusted here. It's already captured because it came in P&L only. It came in P&L of question only. Agreed. So should we have to do anything for it or already done? Once more, you became Mauna, silent. Got it. Can I move forward? Yes. So should I show this 12,000? Some recorded guys keep asking me the query. Sir, will we not show this 12,000 under investing activity, sir? Included, macha. How did you get here? 1 minute. How much? What is the selling price of investment? 102. Where will this come? 102. Sale of investment. What activity? Investing. Under investing activity, you will show 102. How did you get 102? 90,000 cost plus 12,000 profit. So profit is already included. Again 12,000 you don't have to show again where? Under investing activity. It is already included in the sale value. Okay, now fine. Moving along. What is the next? Purchased plant asset for 120. What is the entry for plant purchased? Plant account debit to bank account. How much? 120. Next. What is next? Sold plant cost 10,000. You sold entire plant or one of the plant? One of the plant whose cost was how much? 10. So when they say cost here, it's always original cost. What was the original cost of this asset? 10,000. Accumulated depreciation means so far how much depre have you charged? How much is that? 2,000. Okay, take your calculator. You bought the asset originally for what value? 10. Till now, how much depre have you charged on this asset? 2,000. That means what is the value of the asset? 8,000. Correct? The value of the asset is 8. Did you sell it for 8 or only 5? Happiness, sad face. Sad face. Why? How much? Loss of 3,000. First find that. Loss on sale, find. How did you find? Take the original cost. How much? 10,000. So far, how much have you depreciated? 2,000. That means what is the value of the asset? 8,000. How much did you sell it for? 5,000. 8,000 worth of asset you sold it for 5. So that means you made a loss of 3. Done now. This 3,000 is a loss. It has gone where? It has gone where? P&L. Due to this loss, what happened to your P&L? Reduced. That means your operating cash flow also reduced. It is operating activity or investing activity. So what we should do? Add back. Did we already do that? Yes, here we already added back. Already done. Okay, G. Now the concept. What concept? Sir, as long as the asset is there, that asset ka provision for depreciation account also will be maintained. If that asset is sold, provision for depreciation for that asset which is sold should also be cancelled. Agreed? Okay. I mean, two things you need to cancel here. Tell me, what are those? Asset also you need to cancel. Provision also you need to cancel. But we can do compound entry. You have sold an asset. When you sell an asset, you will do? You will debit bank. You will debit or go one step back. You have to cancel two things. What are those? Provision for depre and asset. What entry? Asset has debit balance. To cancel, we will credit. Provision has credit balance. To cancel, we will debit. Entry is provision for depreciation or accumulated depreciation account debit to PP. Yes. You sold an asset. You will get money. That means bank will be debited. Yes. You sold this asset at profit or loss? Loss. Nominal account rules say loss to be debited. Make a compound entry for me. Bank account debit. Loss on sale account or P&L debit. Accumulated depreciation account debit to PP account. Clear? Bank debit how much? 5. Loss debit how much? 3,000. How much provision have you charged on this asset which is sold? 2,000. Maintain this provision or cancel this? It has credit balance of 2,000. How do you cancel? Debit by 2,000. So when you add all this, you will get how much? 10. So asset will be credited by 10. Now this ties with our concept also. What concept? Whenever provision for depreciation method is maintained, asset ka ledger will always be maintained at original cost. What was this original cost of the asset sold? 10,000. If asset is shown at original cost, you also need to cancel at original cost. Hence PP we credit at original cost of 10. That way also it will match. This I told you in regular class. Whenever an asset is sold, you need to add three things. And when you add those three things, it should always come to original cost. What are those three things? Banco, profit or loss on sale, and provision for depreciation. If it doesn't match, that means recheck your calculation. This calculation you have done something wrong. Okay, now wait. Can we post this into PP ledger? When you post this in PP ledger, what will you post it as? By bank, by accumulated depreciation, by loss on sale. Check, have we posted? By bank, by accumulated depreciation, by loss on sale. Sorted. Sir, this entry affects only PP or also provision for depreciation? So in your provision for depreciation or accumulated depreciation, what entry you will pass? To PP how much? To plant account 2,000. Done now. Next adjustment. What is the next adjustment, pa? Where is it? Here. We have issued 1 lakh of bonds at a face value only in exchange of plant assets as on 31st March 2021. Sir, when you buy a PP, ideally what are you supposed to pay? Cash. But here, did you give cash or you gave bond? So you purchased a PP by giving away bond. What is the journal entry? When you purchase PP for cash, what is the entry? PP to cash. You give away cash or you issued debentures to them. Debentures or bonds to them. What is the entry? PP or plant account debit to bond account. How much value? 1 lakh. So in plant ledger, what will you post it as? To bond, 1 lakh. In bond ledger, what will you post it as? By plant and machinery or plant 1. Yes, sir. For this 1 lakh, cash came in? No. Cash went out? No. What came in? Machinery. What went out? Bond. Cash coming in, cash going out, or no impact? So will this come in your cash flow statement or it will not? It will not come because there is no cash movement. Next, what is next? We repaid 50,000 of bonds face value at maturity. Repaying a bond means one liability of repaid. What is the journal entry for creditor paid? Creditor to bank. What is the journal entry for bond paid on same lines? Bond account debit to bank account. How much? 50,000. So in bond ledger, what will you post it as? Bond account debit to bank account. 50,000. Yes, sir, Sirji. Our Ashik only, no? Ashik is saying, sir, it's a decrease in liability you put under working capital changes, sir. No. If you're having that confusion, some students have that confusion. Sir, should we not show this in working capital changes? Sir, under working capital changes, only current asset, current liability will come. Only current asset, current liability will come. Bonds or debentures and all are not current liability, they are non-current liability. That is one way to sort out. Sir, all current liability will come under working capital changes, sir? No. Only operational liability, operational current assets only will come. Okay. Sir, will tax come under working capital changes? Tax is also current liability. Will provision for tax come under working capital changes? Ideally, it should come. But AS3 has a separate category called tax. AS3 requires us to show the tax separately. So can it come under separately also, working capital changes also, both, or only once? Hence, provision for tax will not come under working capital changes. That's one liability which will not come under working capital changes. Got it? Same lines. Proposed dividend or dividend payable. Dividend payable is also current liability. Will it come under working capital changes? No. Why? Is a dividend part of operation or it's a finance activity? Finance activity. So dividend also will not come under working capital changes. If you want it as formula, non-current assets, non-current liability will not come under. I'm just saying what and all will not come under working capital changes. Non-current assets, non-current liability. Provision for tax as well as your dividend. You can call it as whatever name. Proposed dividend, final dividend, dividend payable, whatever. These will never come under working capital changes. Other operational related current assets, operational related current liability will come under working capital changes. Example, debtor, bill receivable, prepaid expense, creditors, bills payable, outstanding expense, inventory. These are all some of the components of working capital changes. Okay, Nasaru, if you want it as formula. Next, what is next? I think bonds over. No, I think we captured that. Next, we've issued 50,000 shares that we have already captured. We paid dividend. How much? 8,000. Go back to your balance sheet. Is there any dividend payable? Is there any dividend payable? No. I mean, should we have to open a ledger or directly? Directly. How much is the dividend paid? 8,000. Yes. Sir, why is it not coming in balance sheet, sir? Sir, you have declared the dividend and you have paid the dividend. You have declared the dividend and paid the dividend. When you declare the dividend, what is the journal entry? P&L account debit to dividend payable. How much? 8,000. When you have paid the dividend, dividend payable account debit to bank account. How much? 8,000. Dividend payable credit, dividend payable debit. It has got nullified. Balance sheet ka simple funda is this. Any ledger account that has a balance goes to balance sheet. This dividend payable ledger has balance or it has become zero. So will it come in balance sheet? That's the reason it does not come. Sir, why will not nominal account come in balance sheet, sir? Nominal account is already transferred to P&L. Their ledger balance is also C. Hence, nominal accounts also don't come in balance sheet. Next, how much dividend you paid? 8,000. Dividend paid what activity? Financing activity. So under financing activity, you have to show 8,000 minus. Done now. Now many of our ledger is open. Let's capture ledger information into cash flow statement one by one. First, plant. Check debit side mein any cash or bank entry is there? Yeah. This is plant purchased. How much? 120. Plant purchased, where it will come? Investing activity. Plus or minus? Minus. Have they taken minus 120? Check. Minus 120 here. Okay. Credit side you check. Buy bank. Buy bank means it is a sale. Sale of plant what activity? Investing activity. 5,000 plus have they taken? Yes. I mean this ledger ka full information we have captured. Done. Next ledger. Accumulated depreciation. From Why I said we prepare accumulated depreciation? To know current year ka depreciation. Here the irony is this ledger you could have cut. Why? Current year ka depreciation is already available. How much? 37,000 in first table. If this info was not available, then you would have got it as balancing figure. Check if you want. These two ka total you do. How much? 105. 105 minus 68 you do. 37,000. What is that 37,000? Current year depreciation. If this was not given in the question, you would have got this as what? Balancing figure. But fortunately for us, this is already given. What is the journal entry for depreciation here in this method? It's an accumulated depreciation method. So what is the entry? Depreciation account debit to accumulated depreciation. Either you can write by depreciation or you can write by P&L, because depreciation goes to P&L. That means anything from this I need to capture in my cash flow statement. Depreciation as a non-cash expenditure I need to add. I think we have already done that. We have already added 37 depre. So anything more from this ledger or done? Next, investment. Look at the, I think, one we forgot, profit on sale of investment we didn't post. 1 second, one we have not ticked. Okay, and 1 minute. Where is that investment? No, here. What was the cost of investment? 90,000. How much did you sell it for? 102. All right. Sir, there are a couple of ways you can pass the entry over here. I'll tell you what ICA does and how we can pass. Sir, investment ka ledger is shown at what price? Cost price. So when you sell the investment, you have to reduce at what price? Cost price. Yes, sir. What is the cost of the investment? 90. How much did you sell it for? 1,02,000. One way to pass the entry is bank account debit. How much did you sell it for? 1,02,000. Yes, sir. So you will credit investment. Since investment is shown at cost price, you will credit at what price? 90,000. Yes, sir. Balance 12,000 is what? Profit on sale. That goes where? P&L account. This is one way of passing the entry. Okay. Our ICI passes the entry slightly different way. What is that is? When you sell the investment, they pass the entry bank account debit 1,02,000 and they will directly credit investment at 1,02,000. They will credit investment at 1,02,000. Sir, investment is shown at what price? Cost price. So you should credit at what price? Cost price of 90. But here they have credited cost price or selling price? Selling price. Yes. Do you think ledger will match or it will not match? Then they will pass one more entry. Here investment you have credited lesser more. So what they will do is investment account debit. How much more they have credited by? 12,000. What is that 12,000? Profit on sale. And then they will say to P&L account. They pass these two entries. Okay, now this is also right. This is also right. But our ICA ka study mat and suggested answers will have this treatment. Got it? If you sum it up, you will get the same entry if you want. Check. Investment you credited by how much? 102. Investment you debited by how much? 12. Adjust 90. This entry also will give. Both are same. But I suggest you follow this for exam because ICI follows this approach. Okay, na Saru? Tell me the posting of these two entries in investment ledger. In investment ledger, what will you post it as? By bank, how much? 102. I think that we have already posted. One more entry. What is that one more entry? Investment to P&L. How much? 12,000. Where it will come? In investment ledger to P&L, 12,000. That way, this 102 and 12, if you net off, you will get the cost price of the investment. Yes, sir, Saru. Now, this ledger we have closed. Any impact in cash flow statement? Check. To bank. To bank means what? Investment purchased. Investment purchased what activity? Plus or minus? Minus how much? 78. Next, how much is investment sold? By bank means investment sold. What is the total selling price? 102. Where it will come? Investing activity. I think that we ticked off previously only. Okay. Yes. I mean this ledger is also fully closed. Next, bond. All the components are ticked off. Now we will push. This is to bank. To bank means when you're crediting bank means inflow na outflow na? Outflow. This is bond issued or bond repaid. Bond repaid what activity? Financing activity. Positive, negative. Financing activity negative 50 captured. Next, this is over. Anything else or from bond account or over? Over. Next to provision for tax. I think provision for tax we already captured 9,000 tax paid. I think somewhere we ticked here. So all the ledger, all the information is done. Now I told hidden adjustment you should not forget. What is that? Interest. So always go back and check whether it's always a good practice to remind yourself of some of the examples of investing activity, financing activity. Can you tell me what are the components of investing activity? Purchase of PP, sale of PP. I think that anyway get captured through ledger. Then purchase of intangible asset, sale of intangible asset, not there at all. Then investment purchased, sale of investment captured through ledger. Next two components, interest received, dividend received. If you just check, nowhere they will comment about interest received, dividend received. They will not comment. But does it mean it is not there or it is there? Where it will be there? First table. Interest received, dividend received. Interest received there. Yeah, how much is that? 6,000 rupees. Interest received is what activity? We receive interest on our investment. So what activity? So should we ignore this or show? Where? As what? Negative or positive? This you don't forget. Many students forget this. Then they will say cash flow statement not matching. Okay, so always good to remind yourself of some of the components. How much is that? 6,000. Add. Where? Investing activity may 6,000 plus. Where is investing activity? Here. 6,000 plus. Okay. Dividend received there or not there? Check first table. Dividend received not there. Sorted. Financing activity ka components quickly recollect for yourself. What are the financing activity ka some of the example? Issue of shares, buyback of shares. They will give it an adjustment. So captured. Issue of preference shares, redemption of preference shares, not there. Issue of bond or debentures, redemption of bonds or debentures, captured. Next two. Interest paid, dividend paid. Dividend paid they gave in the adjustment, which we captured. Interest there, yeah, interest expense paid how much? 23,000. Okay. We have already adjusted an OCF, but interest paid is what activity? So should we ignore this or show? Where? Financing activity as what? Negative. How much? 23,000. Financing activity may negative 23. Captured. So everything we have reminded. Rest everything is total. If you just check any ticks are pending. This is fully covered. This is total. You don't have to write this, but ICI does this. Operating profit before working capital changes. It's a total. This is cash generated from operations. Total. This is also total. This is also total. This is also total. When you add all the three activities ka cash flow, you are getting 31. To this, if you add opening cash, compulsorily you should get sorted. Okay, took a little extra time. This question is popular. It has come few times. Is it okay? 10 minutes we'll spend and revise, or it's okay, you'll manage yourself. Revise means not much. 10 minutes it will take. Do means do, otherwise I'll leave. Okay. Study mat question has come in multiple MTPs and previous year also. Small question, but a good concept question. Jyoti of Star Oils Limited, they've given some data. You need to prepare cash flow statement. Sir, the moment they give profit, it is what method? Direct or indirect? Direct method. That is your way of saying finish faster. 10 minutes only, that's all. Sir, they've given net profit. What did I say? Whenever they give you net profit, it always means PAT. How much? 25,000. But our AS3 says start with PAT or PBT now. PBT. Sir, first you take profit before tax. From that you reduce tax. Then only you get PAT. If PAT is 25,000. If PAT is 25,000 and if provision for tax is 5,000, how much is PBT? 30,000. Okay, now ICI suggested answer will always start at 30. They will do this adjustment, then only they will start. Okay, now. So instead of PAT, we will start with what now? PBT. How much? 30,000. Take a check. PBT 30,000. Now the adjustments one by one. Thagadak. Dividend paid. 1 minute, hang on. Sir, before you pay the dividend, you will declare the dividend. What is the journal entry for dividend declared again? P&L account debit to proposed dividend, dividend payable or whatever. How much have you paid here? 8535. This is the journal entry for dividend declared. And when it is paid, what is the journal entry you will pass? Proposed dividend or dividend payable account debit to bank account. Correct? Huh? Okay. Sir, dividend paid, what activity? Dividend paid, what activity? Financing activity. Plus or minus? Minus. How much? 8535. In financing activity, they would have captured somewhere. Where? Oh, this is question. Sorry, my bad. Okay, I need a break, I think. So this is your financing activity. Dividend paid is 8535 minus. That is captured. Now, normal doubt I get from many students, especially at recorded is, sir, this dividend should be added back in OCF or we should ignore us. You got the question. This dividend of 8535, we should add back in operating cash flow or ignore. Ignore. Why? Correct answer is ignore. Why? But we wrote in chart book dividend, we have to add, no? Because, okay, once I'll just, little bit deliberations we'll do. When you declare the dividend, P&L balance will reduce. P&L balance reduce. If P&L reduced, OCF also reduced. But dividend paid operating activity or financing activity. That means we should add back. Correct? Ideally, we should add back. But here we will ignore. Why? Sir, I told you, no, it's very important to identify what profit is given to you in the. Here, have they given you profit after all adjustments or PBT? Remind yourself of that order. From PBT, if you reduce tax, what are you going to get? PAT. From PAT, if you reduce a dividend, you will get profit after all adjustment. If they've given you this profit in the question, that means the dividend is already reduced. Hence, we need to add it. But did we take this in the problem or we took this in the problem? We took PBT in the problem or we have taken PAT in the problem. If you take these two, one of these two, then you will add back the proposed dividend or ignore it. Ignore it. Why ignore? Because is dividend already deducted or yet to be deducted? Yet to be deducted. That's the reason cash flow statement you can never mug up. If you go mug up, it will become like pressure cooker. Too much to mug up. If you just approach like this, it is much easier. Done now. So in this problem, under operating cash flow, we will not do anything for dividend. Check. Again, this is question. See here, 8535, are you seeing anywhere here? Check. They have not done. Why? Because we took profit before tax. That's it. Suppose we had taken profit after all adjustments. Here, if we had started with profit after all adjustments, then what we would have done? Added back dividend. Like that. So depending on the profit, plus or minus will keep changing. It will vary from problem to problem. And one more doubt I get from the students is sometimes what ICA material does is we have such question. Current year dividend is 0. Current year dividend is 0. Last year dividend payable they will give. Once more. Dividend payable is there in balance sheet. Dividend payable is there in balance sheet. Current year dividend payable is how much? 0. Last year, let's say it is 1 lakh. Okay, and we are starting with profit after all adjustments. What are we starting with? Profit after all adjustment. That means you will ignore the dividend or add back the dividend. Add back the dividend. No, in this problem we will still ignore. Why? Sir, the dividend that we add here should be of current year. It should be for current year. But in the question they have given you current year dividend or last year dividend. So last year, if you are preparing cash flow statement, we will add back the dividend. Since current year dividend is 0, we don't have to add anything. That's another way I say I ask this question, which many students find it a little confusing. Understood? Yes, sir. You will add back two circumstances if you want. You will add back dividend provided what is your starting point? It is profit after all the adjustments. That is one. And the second one is that dividend should relate to the current year. Okay. If current year, if nothing is declared means you don't have to add anything. So these two checkpoints you keep in mind so that you will not go wrong. Done now. Can I move forward? And then we'll have to add back. If current year has a balance means you need to prepare a ledger, find out how much current year dividend is declared and only that current year ka declared amount you will add back. Because the journal entry for dividend declared is P&L to proposed dividend. Financing activity, dividend paid, dividend paid. You have to put up a ledger, and if only opening and closing is given, what is the assumption? Last year's is assumed to be paid. Correct. Perfect. Okay. Others okay? Stars are. No comment. Okay, thank you. Provision for tax. I think we already considered this. Yeah. Income tax paid. Where it will come? Income tax paid. Quickly tell pa. Operating cash flow. Beginning, ending. Ending. 4248 ticked off. Next. Loss on sale of asset. Loss goes to P&L. Because of loss, P&L has reduced. OCF also reduced. But sale of asset, operating or investing activity. What to do? Add back. How much? 40. Have they added back 40? Yes. Okay. All right. Next. Sir, what is the book value of the asset sold? 185. But you have sold it at how much loss? Book carrying amount is 185. You have sold it at 40 means your selling price is more or less. What is your selling price? 185 minus 40. Your sale value is how much? 145. Sale of investment. What activity? Investing activity. How much you will show? 145. As what? Positive, negative. Sale of asset means money coming in. 145. You don't have to prepare working note. Here only you can write 185 minus or 180 minus 40 or whatever they have told there. Next. Depreciation. Depreciation, non-cash expenditure. What to do? Add back. Have they added back 20,000? Yes. Next. Profit on sale of investment. Profit on sale of investment has gone to P&L. Because of this, P&L balance has increased. So OCF also increased. Operating activity or investing activity? What to do? Minus 100 they've done now. Check. Yeah. Then you sold the investment at profit, but what is the carrying amount of the investment sold? Carrying amount is 27,765. You have sold it at a profit of 100 means what is your sale value? You will minus now or add this? How much is that? 27,865. Will this come in cash flow statement? Will this come in cash flow statement? You have sold an investment. Will it come? Yes. Where? As what? 27,865 as what? Positive. 27,865 positive under investing activity. Next. What is next? Interest income received. Interest income received is what activity? Investing activity. Will it come under investing activity? Yes. As what? Plus. But interest received on investment is an income. Income has gone to P&L. Due to this, P&L balance has increased. So OCF also increased. What to do? Minus. So minus 2506 under OCF. Next. Interest expense. Interest expense paid. Allah. They have given interest expense and expense paid separately. First, we'll do one by one. Interest expense goes where? P&L. Due to this expense, P&L reduce. So OCF also reduce. But interest is operating activity or financing activity. What to do? Add back. Add back how much? 10,000. Have they added back? Yes. In the absence of information, we always assume interest expense and interest expense paid are same. But here, look at the very next line. What have they told? Interest paid is how much? 10,520. You could have last year outstanding interest also, no? Which could be settled in the current year. So it need not match. It may be more or it could be less. But how much have you paid? 10,520. What are you preparing? Cash flow statement. Cash flow statement does not vary whether it is for current year or last year. Did you pay it? Yes. If it is paid, will it come? Yes. Where it will come? How much? 10,520 under financing activity minus. Next. Increase in working capital. I told no, instead of current asset, current liability, sometimes they directly give increase in working capital. Increase in current working capital means minus. How much? 56,081. Minus. Under working capital changes, 56,081 minus. Next. What is next? Purchase of fixed asset, investment in joint venture, expenditure on construction work in progress. All are what activity? Investing activity. These three numbers we should minus. Where is it? 14,560, 3,850 expenditure on work in progress. Take it, dump it. No calculations. Next, proceeds from calls and arrears. Calls and arrears is related to shares. Issue of shares, what activity? Financing activity. So calls and arrears, ka money received is also financing activity. Under financing activity, 2 positive. Next, grant for capital project. Capital project means your PP and all. If PPE is investing activity, the grant that you have received from the government is also investing activity. How much? Well, where it will come? Investing activity as positive. Long-term borrowing, short-term borrowing, both are source of finance. Where it will come? Financing activity, 25,980 and some 20,000 some amount. When you issue all this, when you take a loan, money is going out or coming in. So all these are what? Outflows or inflows? Inflows. That's it. Remaining is opening cash and closing cash. That's it. Into question, but has come. Rest, I think whatever, if you just check, rest all is total. This is total, this is total. This is also total. Total, and total is standard done. Thank you for your time and patience.